Hey traders, this is Christian from Tribeca Trade Group with your week ahead video. So, quick recap from last week. More of the same, more very much choppy markets. If you look at the SPY, which I'm going to get to the technicals on this, but very, very flat and trading in a tight range. So we've got another big week next week in terms of earnings that really starts to accelerate. We've got 105 companies that are reporting in the S&P 500. I think last week it was 33. So we're now really getting into the heart of earnings season. Not so much Monday, but Tuesday and Wednesday. Tuesday, Wednesday, Thursday, I would say, are the big days next week for earnings. So, looking at the major indices, we kind of have the good, the neutral, and the bad. And I'll just kind of go right into these technicals here. And we've got a couple different pictures here. So, you look at the S&P, we'll kind of start with the neutral first. And we're right in the middle of that value area for the month. Same thing for the week. I can show that chart as well, but for the week, kind of looked at the same thing. We really just could not get going in either direction. So we're still kind of consolidating here. I've got, for the last couple of weeks, how I've been playing this consolidation period is selling iron condors and selling premium. So selling a call spread, selling a put spread. That's worked really well. We had one trade that expired in the beginning of last week, and I rolled that trade to next week's expiration. So the feeling is, if you have a couple long trades on and you're kind of frustrated and just sitting with an option portfolio and watching some of these positions kind of decay because the overall market is not moving, you can take advantage by selling premium, and that's what I'm doing right now. I just don't think we're going to see a major. I think eventually we're going to get out of this consolidation period. I just don't know when it's going to happen. And the two levels to watch in SPY is 227.80, and on the downside, 224. And looking at the MACD, which is great for looking at momentum trend changes. It's getting close to crossing over. Has it done it yet? Has it done it yet? No. So, one of the things in trading that's a little bit difficult is you always want to anticipate. You always want to be careful of anticipate. You do want to anticipate things, but you don't want to get exposed by thinking something is going to happen and it doesn't happen. So it hasn't happened yet, but watch for that MACD crossover and watch for 227.80 on the high side. We'll go to the good next. Qs, I've mentioned this in the last couple newsletters. Right when we broke value, that coincided with an MACD crossover, and it just made a new high on Friday. So, if you're long, or if you got long based on what I mentioned in the newsletter, great job. Kind of look for, I wouldn't be getting longer the Qs right now. I would be waiting for maybe a little bit of a pullback and maybe these two moving averages crunch. It's when it does this, it looks like it's a good buying opportunity. So I didn't buy it here on the crunch of the moving averages. I waited for the breakout, signaled that in our newsletter, and that's been a great call. So that is the good. The bad, which has me a little bit concerned right now, is IWM, and it broke down towards the end of last week. IWM, I always like. Some people look at the Qs as a leading indicator. I will look at those, but I prefer to look at IWM. Small caps really tell me where the momentum is in this market. So we just barely broke. We came back and we retested. This is the dotted line here. So previous support, we came back and tested. So a little bit of a warning sign. We have the two moving averages crossed below here, and we just slipped below this green line, which is the daily value area. So, I typically want to see or want to wait till we get back inside value. So maybe we could do that right in the beginning of next week. That's kind of what I'm hoping. I really don't want to see us come back. This is another breakout area, which if you actually have to zoom out in the charts, but if we cannot reclaim this value area here in small caps, we might be looking at a pullback to back here. So I hope that doesn't happen. I hope that we're able to kind of, we finished Friday almost trying to get back above that level. Obviously, there was a little bit of volatility with the inauguration. but we're pretty darn close. But take it for what it is right now, and it's an inside day based on Thursday's big move down in small caps. So that's the major indices. That's the technicals. Again, you kind of have a little bit of a mix, and you look at the three. One's neutral, one's strong, one's a little bit weak, and kind of reinforces my overall view right now is just kind of sitting on my hands and waiting for the S&P to move higher and waiting to see what's going on in small caps. Also for swing trading, one thing I've noticed is, earnings season is not the best time to swing trade. It's just more of a choppy market. And a lot of the option signals, if you watch option flow like I do all day long, it becomes a little bit noisy. You'll see an aggressive call buyer, maybe go out to February, maybe go out to March. However, you see that the name reports earnings in like a week, so you don't know if they're trying to play earnings, if they're hedging, they're long or they're short. So it just gets a little bit noisier to deal with, and I tend to trade lighter for swing trading. I'll still day trade, but for swing trading, I'm taking less position size until we get through the heart of earnings season. The other thing to notice, this is something that I've been putting in the newsletter. A lot of the company buybacks are kind of still fueling the market because company buyback plans are so big. A lot of them are in quiet periods, a few days before and a few days after earnings. So it doesn't have the usual support. Overall, the stock market doesn't have the usual support it does when these buyback machines are off. So another thing that I wanted to bring up is, you always want to talk about the risks in the marketplace, and if something is kind of flashing warning, and we're not seeing that at all in the VIX. The VIX got crushed on Friday, down 9.7%. Which I think is kind of expected after a big event. Sometimes the volatility moves up a little bit into a big event like the inauguration, and then once it happens, it sells off. Well, it sold off pretty hard. However, that's not the only thing, the only measure of risk. Skew, and those aren't familiar with what skew is. It measures tail risks. So in the option world, there's a measure that looks at out of the money options, specifically about 10% out of the money options. And skew measures whether or not the implied volatility goes up or down. So generally a reading of around, so you can see the white line, and I've overlaid this with the S&P 500 just to kind of show what this means. And I got a lot of questions. I posted this chart on Twitter, and a lot of people asked me. They said, what does this mean? What are you saying that skew is this high? Well, I'm not saying anything. I'm just kind of noticing the pattern here. And when you have a move this high, it generally means something's up. The options market is implying a higher amount of implied volatility in 30-day, basically 30-day options. So every time this has happened, not every time. If you go back a little bit further than 1 year, it hasn't played out every time like this. But you could see when the skew gets very high, got to 155, you could see the market dipped, kind of coincided. You can see it here as well. This was the election. You can see the skew get to above 140. Notice it's about 145 right now. So, as I mentioned in the newsletter, I'm not trying to scare anyone, but from a mathematical standpoint, what is this implying? Well, a 144 level. And I looked at this this is straight from the SIBO website. When you get to a 145 level in skew, it means that there's about a 15% chance of a 2 standard deviation move in the XPX. So, these are statistics, right? I mean, these are probability chances of a move. When it gets back down to 100, just to kind of give you a frame of reference, it means that there's a 2.3%. The option market is implying a 2.3% chance of a 2 standard deviation move, which is a large move, right? So we're not at so that's the frame of reference when the skew's down to 100. Right now we're 146, so we're now pricing in a 45% chance of a decent move in the equity market. So I don't want you to, again, I'm not trying to scare anybody, but I want you to be prepared. What I did was I took some action and I bought some IWM puts. Just in case. I mean, you go back to the VIX, and the VIX is not showing any chance or heightened volatility right now. So you can take advantage. That means that the option prices are pretty cheap, right? And you want to be buying. I would rather buy insurance on my portfolio when the costs are low. Not, to use the analogy, you don't want to be buying homeowner insurance like, hey, my house is on fire, I need insurance now. It's not going to work that way. It's going to be, you know first of all, it's not going to help you, and it's going to be a lot more expensive when something like that happens. It's cheap now. And so, as I mentioned, I've talked about this in a few paragraphs here in the newsletter, just talking about, I'm not really looking to make money on my hedge. I just want a little bit of insurance. And once we get back to, once the reading goes back down and slips back down, down 135, we can kind of say, okay, maybe it was a false alarm. The option market may have been wrong. Again, it's not saying that it's a 50% chance or a 70% chance of a two standard deviation move in equities. It's saying a 15% chance. So it's there. It's above the normal reading of a 2 or 3% chance. So these are things to kind of be aware of, and it kind of gives me just another reason to trade a little bit lighter, especially for swing trading, while you have that skew, and while the equities are really not showing uh, a breakout level right now in the S&P. So I've got my levels. I talked about the levels in the SPX to watch. I've talked about earnings season, how it's a little bit messy in terms of swing trading. So that's fine to be kind of to be patient in this market, and that's what I want to be right now. The other thing to look at, I'll get to sectors in just 1 second here, but the other thing to look at is, last week was the first week where there wasn't any equity ETF inflows since the week prior to the election. This is something that I analyze every day and every week. And there's 600. Now, there wasn't a lot of outflows. It was just 624, which I almost think kind of flat. It just shows that there's not a lot of buying that's going on right now in the marketplace. And the previous week was just 2.2 billion. Back in the couple weeks after the election, it was around 10 to 15 billion dollars of inflows, to put things in perspective. And that's where there was a ton of buying going on. And obviously, we're just not seeing that right now. So I kind of want to watch for that as well. I want to see when buyers are going to show back up into this market, because they just haven't been there the last 2 weeks. In terms of flows, sector flows, energy and materials saw inflows. You could see there was six different sectors, financials leading, that saw outflows last week. So again, this is kind of the first week that we've seen this, where there's been just more sector outflows than there has been inflows. Very quiet. I don't have a lot to talk about here in terms of international flows as well. We've seen a lot of inflows going into international developed markets over the last 2 months. In the last week or so, week and a half, they're still seeing inflows, but they're just definitely not the same size. The one thing I can say is that actually international flows, we're seeing more inflows the last 2 weeks than in U.S. Than going into the U.S. So I think people are bargain hunting a little bit. You're seeing that in a couple different areas where there is some money that's being put to work there. Commodities, not much else going on there either, and same thing with bonds. Very little buying going on in commodities or bonds. So I just wanted to talk about, and then I'm going to talk about a couple of individual names and some of the aggressive option activity that we saw last week, which I like to always cover a few trades from last week that I thought were interesting. I'm just going to talk about a couple charts that I found interesting there that did see inflows. ITA, which is the aerospace and defense ETF, saw some nice inflows last week. You could see that volume spike up. Notice it was comparable to this move here. So we're starting to, this was all inflows. All of this volume, massive money going into aerospace and defense individual names. The names that make up this particular ETF is Boeing, UTX, Lockheed, General Dynamics, Raytheon, Northrop Grumman, TXT. So those are the names that are in the ETF. And again, just a lot of inflows back in November, but you can see that, the volume really kind of trailed off here quite a bit. but bam, there was a big inflow one day last week. So the level, I'm not involved in this one yet. I would watch 144.35 on this. What I think is a little bit more constructive is industrials. The dollar got a little bit weaker. I really got a little bit worried about industrials because they're a little bit more sensitive to a strong dollar. Well, the dollar's been getting a little bit weaker and stopped going higher, and you could see that the industrials may be poised for that next move higher. I would be watching the MACD. Watch for a trend change MACD crossover. It looks like it's almost there, and also we're right at that red line, top of value, and kind of ready for a breakout. Hasn't happened yet, but that's why I've got it in the note, something to watch. XME, metals and mining, which also, so I'm kind of focusing on the last couple of newsletters. I focused on technology. One week I talked about semis, SMH. They've done it. They've broken out. Same thing with tech, XLK. That was in last week's newsletter. So I try to always talk about what's on the verge of breaking out, and where and why I think it's a particular sector is interesting. So XME has been pushing the top of value. That also looks poised, and there's a level to watch here, right at that top of value as well, in the metals and mining ETF. A lot of that ETF has some gold miners in it. It also has a lot of steel names involved. And then a little bit of a different ETF, IHI. This is the medical devices ETF. Take a look at that big arrow down there. A lot of volume in that one. That volume represents an inflow that happened. Again, the inflows that I track are evidence of the volume that occurred. It's very rare when you can actually find something and you could say, hey, this was definitely buying. You can see that in ETFs. When the outstanding shares go up, that means somebody was buying. So that's what we saw this week. There was $111 million of inflows last week. Medical devices, a really strong group back in 2016 until about November, and a couple names ran into trouble there and sold off pretty hard. Did not participate in the Trump rally, but somebody's buying this as it reclaimed the 200-day moving average, which is the white line, my chart. So could be an interesting area to get into and watch for unusual option activity in that. EWG Germany. Take a look at this chart. Since it's reclaimed speaking of the 200-day moving average, since it reclaimed the 200-day moving average, this thing's been hasn't looked back since. So I think any type of small pullback, you could see that it's just kind of breaking out of this resistance. And you could see that we're not even close to the highs where it made last year. So once you get out of this range, I think you got a nice chance to possibly get back to last year's highs. So I want to just turn to some individual names and some names. You can see the names that I've highlighted in yellow. I just want to cover them pretty quickly, and I'll just kind of go over some charts. The first couple ones, energy. I think energy is one thing that seems fairly certain with Trump taking office is that he's going to be focused. I think energy names are going to do okay under his administration. So WLL Whiting, this is a name that I'm long, and I've been long for a little while now. And we've just seen repeat call buying in this thing. If you notice, so I'll remain long while it's above the 200-day moving average. That's the white line. And I'm in a longer day to play. I'm in a June play, so kind of going to give this thing a chance. It's been consolidating here for a couple weeks, so that's why I'm in a little bit of a longer dated play rather than a front month trade. So I want to give this thing a chance. Hopefully it gets above this resistance. But the fact that they keep coming in and buying more calls tells me something's going on in the name. WFT, this is another energy name where we keep seeing, it's been a couple days a week for the last couple of weeks where we've seen repetitive buying in, and it's right now under the 200-day moving average, so I'm waiting for a move. So I'm kind of just sitting and waiting. Notice it got here. This was the last time we saw a lot of call buying. The name really took off, but it stalled out right at the 200-day moving average. So that's what I'm waiting for in this particular name. A couple other energy names that I think are really interesting. So sticking kind of with this small cap thing, theme. GLNG, we saw call buying in this one. That white line again is the 200-day moving average, and look at the turn on the 200-day. And 52-week high in this name, up 4.3%. I did, typically I don't like to buy names when they're up this much, but there was several times where a call buyer came into GLNG, so I did start a position. Again, just like I mentioned in the beginning of this call, I'm not taking any really huge size trades right now, but these were March 30 calls, and I took about a 25% position size, which of what I would normally swing trade. And if it happens to come in a little bit, then I can always add to that because I didn't go in with 2 feet. A couple other trades that I thought were interesting. HAIN calls. This is also a name that, a big gap here from this move down, where they mentioned that they had accounting issues. So accounting issues generally not a place where I want to live. But again, maybe watch for a move above the 200-day moving average here. It's still below. More CSX calls going out to January. This was Friday's flow as well. Somebody's looking for further upside in CSX. This was a trade that I was in last week. I did take it off. I did take the trade off going into earnings, and then we had the news story out. A whole bunch of positive things for CSX. What else? I mentioned one other. Oh, another energy name. There was no option activity in this name, but this name also kind of caught my eye. National Oil Well. I think Kramer was talking about this. That's probably what made me look at the chart. But take a look. Just about to see an MACD crossover here, and again above the 200-day moving average. And you take a step back and look at where this stock was. It was an $85 stock. I really like stocks that base for a while and get back above the 200-day moving average. So, again, this would be a name that I would play if you're going to play in options. Maybe go out all the way to January is something that I'm thinking in this particular name. Something to give it time, because certainly these names, just because they get above the 200-day moving average, doesn't mean they're immediately going to take off. Sometimes they grind for a while. So a name that I want to give a chance to work for a long time. A couple other names. TRN saw big call buying. It's another industrial name. This again was Friday's flow. Thursday, couple names. This NRG trade. This name has just been on fire. We saw call buying in this. Pretty sizable call buying. So a common theme here. Names that I'm talking about. Names that have been consolidating for a while and above the 200-day moving average. So trying to show you guys some really good charts coupled with aggressive call buying. So I do think I did hear that those calls, again, this was a $5.5 million trade that printed on Thursday, 44,000 of these contracts. I believe it was tied to stock, so maybe somebody's substituting out of stock and into options. Nevertheless, doesn't matter which way they're doing it, they're still long, right? So but those are going out to January 20. Again, this was a $5.5 million trade. We're also seeing a lot of Alcoa trading, a lot of call buying going into their earnings report. I believe they report next week. Again, another name, similar looking chart above the 200-day moving average. Real nice move last week. About to hit one of these version pointing controls, VBOX. You got a couple of them up there. These, again, version pointing controls or pointing controls that have never been touched before often act as magnets for the price action. What else do we see last week? EL, which I'm actually out of that trade. It's a shorter dated trade, and I don't like to mess with these. February is now going to be front month. Applied Materials, I mentioned the semis group has been really strong. I did actually take this trade, considering it's an April trade. So I'm in some Applied Materials. This is more or less a breakout name. So different looking chart than some of those energy names and material names. This one is, up and to the right, and it's been going that way. So I'm playing the theme and following some of those aggressive option trades. Nuance, kind of same thing here, just trying to get above the 200-day moving average. I thought that was an aggressive trade last week. I don't have a position in that one, but something on the watch list to see if some more call buying comes in. Citigroup, we really haven't seen for the last couple weeks, month, a lot of really aggressive, sizable buying in the financial space. So I don't have a position in this one either. I actually want to see if this VPOC gets taken out and kind of just watch here. Again, I think this was a longer dated position. This was March calls. Decent sized block went up in Citigroup. Just kind of watching for the time being with this financials group. I want to see how much farther they're going to go down, and then watch for a turn. Basically, I don't want to be the first one in there, but I do think interesting. That was Thursday. Just to go a little bit further back, T-Mobile, TMUS. We've actually saw both T-Mobile and Sprint calls go up last week. So I was able to hit three targets. Was it? I think three targets, and I'm holding my last 25% of the position. Beautiful breakout, nice MACD crossover. So this one I'm going to sit for a while, and again, I've already taken 75% of the money off for nice profits in T-Mobile, and we saw a couple trades in this one last week. And then going back to Tuesday, and they actually came in a couple times for consumer staples name, which really we haven't seen too much call buying in this space, but you could see they bought the April 65s on Tuesday, which is the order here. And then the April 67.5 calls, those were bought on Thursday. So, I think a pretty interesting chart. This name is underneath the 200-day moving average, but if you're looking for a counter trend trade, you've got a lot of defined support here. So the name has been basing for a while, and this is a name that I might actually get into on Monday for a counter trend trade. Not every trade that I do, most of my trades are trend trades. I consider counter trend trades when a name or an ETF or a commodity is underneath the 200-day moving average. So this would be classified just as that. When I do participate in counter trend trades, I usually do it on not as big of a size as I do as the trend change. But maybe look for a move to the top of value here in GIS. But take it take it for what it is. Someone's aggressively buying this stock. Couple other names, MAT and Oxy, and again Weatherford, which I mentioned in the beginning, as it also saw calls on Friday. So a lot of Weatherford and a lot of Whiting. So that's it for the video for next week. It is what it is. I would love to say that I'm going all into this market and this market looks great, but I think it's really mixed right now, and patience is the key in trading, and sometimes you just have to sit on your hands and wait for those signals. And I think with the SPY, with IWM kind of breaking down a little bit, for me, I'm going to wait to make sure that these indices kind of confirm what I want to see in them, and then also that skew, which is a little bit of a warning signal. I want to really wait until that gets back below the 135 level. So that's this week's video. Thank you very much for watching. Please go to Tribeca Trade Group. This is the kind of stuff that we talk about all day long in the trading room. We look at setups. We also look for collaborative trade ideas. We use a platform called Slack, and I put just a ton of information. It allows me to really put a lot of my thoughts and analysis, and other traders in the room can do that as well. If we see something that's really interesting in the market, we have a place to post it, to talk about it and analyze it, and find out if there's a trade to do. So I just posted all the names that are reporting for next week, as we will be playing some earnings names. Last week was a pretty good week for earnings. I lost on Goldman. I sold some put spreads. Fortunately, they just couldn't get above the higher strike. But Skyworks and Netflix, two big winners last week in the Tribeca Trade Room. So you can visit us at Tribeca Trade Group, and the special that I have on right now is get half off. Half off the first month of your subscription. So basically $65, and you get our full newsletter, which is definitely worth that amount of money just with the newsletter itself, but you get a lot more than that. So $65 for a month, very good deal right now. TribecaTradeGroup.com. Go ahead and sign up there to get involved in our platform. Thank you very much for watching the video, and have a great trading week. Thank you.